Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We start strong in this hour. Joining us, Dominic Konstam of Mizuho Definitive on Wall Street. I got bad news, folks. He's got 21 considerations for 2020. Come on, it's entertainment, Dr. Konstam. I can't do 21 things and squeeze it in with you. So let me cut to the chase. You're going to see rate cuts as well this year. Are you and Rashudo on the same page in that the vector is towards short-term lower rates? The people are pushing against you right now.
Steve is more in the camp that the Fed will probably end up missing the whole year. We're in the camp where, yes, Powell may struggle to get some rate cuts.
But then the new guys shows up.
And basically, there are a lot of good reasons, we think, why they will bring down rates, even if inflation risks are rising.
In the mix, in the three-dimensional XYZ space of Dominic Konstam, back to Credit Suisse, your work with Ira Jersey, and just for Global Wall Street, this is the conversation of the day. Don't tell Matt Miller in Detroit. But, I look, Dominic, at where we are, and the answer is we have a lot of stimulus going now. Are we just expecting out the stimulus that President Trump and others have given us?
Well, the stimulus should be seen in the context of the tightening, if you like, that came from tariffs. So basically, consumer spending in nominal terms fell well short of its trend during the last year because of when the tariffs hit. And now the consumers are kind of getting that back. This is, if you remember, one of the problems with sequencing the stimulus before. You kind of wanted it up front before the tariffs hit, and you didn't get it. So now you're getting it. So that kind of, in our view, avoids any kind of recession or anything like that. So the economy's fine. But I wouldn't say it's going to sort of meaningfully accelerate in a way that will deliver job growth and acceleration in the labor input to growth.
The debate we have, and you're Jordan Rochester, I don't know if you're on speaking terms with him, but he's just been killing it with us, with Japan particularly. But when you look at this, is an equity market in the United States, it's acting in a responsible way, expecting out, or is there an anomaly there?
Yeah, no, I think equities are in a pretty good place. If the Fed is biased to either not do anything or, if anything, cut, then that's fine. The issue is going to come if and when the Fed ever raises rates. But with the new Fed coming in, we would say they would even look through any kind of inflation because that inflation rise that we actually project in the second half of this year is going to be temporary. The AI thing is a really big deal for us. Right. And that will mean you'll get disinflation, if you like, on the back of it in 2027. So the Fed can basically end up kind of not raising rates for quite a long time. And that's pretty constructive for risk assets. Our
conversation of the day for Global Wall Street on YouTube. Subscribe to Bloomberg Podcast. Dominic Konstam with us at Mizuho. I can't say enough about his decades impact on Wall Street in describing almost the umbrella that we are living in here. He's got it's two schools in England, Oxford, and there's another school here that they have better crew. Alarian was there for a cup of coffee as well. Alexis, Christoforous with Dominic Konstam.
Let's talk the dollar. I'm curious what your outlook is just for Forex in general, but we saw a weak dollar in 2025. Does it continue in 26?
Yeah, well, in a way, the dollar wasn't nearly as weak as it could have been in 2025. Okay. That's the way I'd put it. And that was because relative to the rest of the world, the Fed was actually quite restrictive. I mean, ironically, you could say that Trump has some justice for sort of complaining about Powell not cutting rates more because the US was one of the most restrictive major central banks last year. And the dollar was weaker, yes, but not as weak as it could have been. My guess is that this year, as you see a bit more of a divergence across the central banks, obviously some central banks are priced to hike. They probably won't end up doing that. But with the US, with the scope to cut, then you probably will see a bit more dollar weakness coming through. And that's going to be the outlook. Yeah.
What about inflation? You keep talking about it's not really going to be a problem. It's going to be well behaved. What makes you so confident?
Inflation is fascinating. Well, we have, needless to say, we have a great model on inflation. It's a global model on inflation. And basically, the thing about inflation is a lot of lags happen that work through it. So what's happening sort of a year or two ago in terms of money growth and the dollar, that really matters for inflation now. So it's kind of baked in the cake that inflation has been low recently. And it's also somewhat baked in the cake that it will tend to rise in the second half of this year. But after that is a bit of an unknown. And that really depends on the AI thing. I think structurally, we're going to see a lot of disinflation next year, basically.
I'm going to tee up two disinflations. I got China, where there are oddities, including the surplus we saw the other day. And you've mentioned AI twice here now. Dominic, the view from 60,000 feet, talk to corporate America listening right now. Are they going to actually see tangible margin improvement out of AI and out of the Chinese input?
Well, they have massive margins at the moment. I think the idea of AI is it's the route to cutting costs to maintain those margins. Because in a K-shaped economy, I think the final demand from the consumer is going to be a bit more challenged going forward.
On sequencing, which is your hallmark, back to Neil Sauce and Credit Suisse, on sequencing, are companies going to cut before AI benefit? Are they going to invest in AI before they cut? Well, any vision there?
I mean, unit labor costs were basically zero or negative in the second half of last year. So, I mean, they picked up a little bit, but that is effectively the cutting. In the end, they didn't need to really, fire people. Layoff rates were really low, but they didn't work them so hard in terms of the hours side, and they definitely cut incomes, relatively speaking.
I mean, I know a stud like you doesn't look at this, but weekly claims came in under 200,000. When was the last time you looked at claims?
Well, we look at it every week.
Which we've established is one of my favorite.
Okay, stop the show. Can we stop the show? Did Ira Jersey get you World Cup tickets?
Yeah. Oh, not yet. I'm waiting for them.
We're working on them right now. Dominic Konstam with us here with Mizuho. Can't say enough about what Mizuho's doing with Stephen Rasciuto and Jordan Rochester and the whole combo. We're just thrilled to have him in here this morning. We're waiting on Matthew Miller in Detroit, an incredible F1 interview. I'm fired up to talk to Matt Miller about it, maybe later. Alexis Christoforous here with Dr. Konstam.
What do you do if you're searching for yield? What are bond investors to do this year?
Well, I mean, it's basically the main issue is that the yield curve is going to end up getting a lot steeper in real yields. So we expect real yields at the front end to be super low and real yields at the long end to be high. So, there is going to be yield out there, as long as you go far enough out in terms of the yield curve. And obviously there are some markets. I mean, US is a relatively high yielder and the UK is high. So, there is something out there. But yeah, I mean, this isn't the most exciting world in terms of yields outright versus, the risky assets. But you should play the curve basically.
I mean, you were 12 years old, but you lived independence of the Bank of England. Dominic Konstam on the threat to United States Central Bank independence.
I'm so glad you asked that question. So when we were in England, we were taught, and most people were taught in Europe at the time, that there was no such thing as independent monetary policy. Right. You basically, fiscal policy kind of dominated, and the central banks had to sort of go along with it. So in a way, the Federal Reserve Act that gave them their independence, in practical terms, it only really became relevant after the inflation of the 1970s in order to bring down inflation expectations. I think it's a luxury that we enjoy right now, the independence, and it shouldn't be taken for granted at all.
Will our audiences, particularly the global Wall Street that hangs on your every word, should they get used to Treasury driving central bank monetary policy?
Yeah, I think that's what's going to happen. And I think the problem is that if you don't have, say, inflation expectations per se as a real issue, then basically what is a real issue is debt service. I mean, you can't have half the budget going in debt service type thing at a time with all this geopolitical tension.
I mean, Stephanie Kelton, I know you've read every word. Is President Trump actually doing modern monetary theory? I mean, has he brought MMT to Washington?
They're going to end up having to do it because a K-shaped economy with AI is going to lead a lot of people desperate. And if you don't have the fiscal latitude to basically bail those people out with basic income, and monetary policy is a very imperfect tool, it's one interest rate for everyone, then you are going to have to sort of think a bit more creatively about how you interact fiscal with monetary policy. And that really means very low short rates at the front end, and the long end can be a bit higher and may even be controlled at some point if necessary.
And creative, I think, has to mean something other than handing out free money, than helicopter money.
Yeah, well, yeah.
Which doesn't help inflation.
Exactly. I mean, it's got to be targeted at the people who need it most. I mean, it's basically, I mean, we are effectively going down the road of basic income. I mean, and if AI is what it's supposed to be in 5 years' time, there are a lot of people here who will not be working. Basically.
So what is going to be the political response to this among elites and, frankly, among the broad swath of America that is enjoying this prosperity?
Well, it's going to be a bit like Greenland. Eventually, the Danes will talk, and eventually people will sit down and discuss and think more creatively about what you do, because you are blowing up so many different things that we have taken for granted that need to be addressed. So I think there will be this acceptance, if you like, that fiscal policy has to be taken into consideration. Along with the sort of normal mandates of inflation.
So, okay, wise one, how do we work out the debt then? How do we consider our fiscal mess? The theories, all the wonderful work by Joe Stiglitz, is you grow your way out of it on a nominal or real basis. Do you have a confidence with our technology that we're going to grow our way out of this?
So imagine a world where GDP growth is let's say running at 3%, and 4% comes from productivity and -1 comes from labor input. You have pretty good growth, and you can grow out of it if you have, say, 2% inflation. But of course, that world will probably be giving you disinflation if you're not careful. So you kind of need a very supportive monetary policy as part and parcel of that. But then and once you get the latitude on fiscal policy, because you are growing yourself out of it, then you can do your redistribution with your basic income.
But Alexis wants to get in here. I'm being rude. The elasticities have changed. You got 2/3. I mean, I asked Chris Waller, do we have two R-starts? We got an R-start for the haves, and we got an R-start for the have-nots. Do you agree?
In a sense, that's true. But that can also get reflected or embedded in what will be a very steep, real yield curve. Because the real yield curve, when you have very low real rates at the front end, and if the government is funding more and more at the front end, that is how you partly get that fiscal latitude.
I mean, Lisa Mateo just left because she's going to get the surveillance cork to put it in my mouth. I got so many questions. Alexis, jump in here.
Well, speaking of fiscal policy, you got me thinking about fiscal policy in Europe. I mean, it's kind of a hot mess, right? And so if you want to look at opportunities outside the U.S., where are you looking if you're looking in the EU? I mean, it's growing, albeit moderately.
Yeah, well, I mean, opportunities in fixed income, I think, basically it's, they have relatively low rates. They cut rates much more aggressively, relatively speaking. They do have sort of, some countries like France obviously have huge fiscal issues they need to deal with, kind of as bad, if not worse, than Italy. Those are issues that, you could argue that maybe we're at a turning point. But I think the political uncertainty there makes that much more risky. You've still got a lot of political uncertainty that needs to be working through. So, I'm not sure there's, I wouldn't rush off to buy Europe versus.
Can I get in trouble? Is that okay?
Well, you do sometimes.
So I put out a comment on the fan distribution of probability. Dominic Konstam, folks, invented fan distributions analysis on modern market economics. The certitude here of select Fed governors and presidents right now, I find absolutely mind-boggling. How do you respond to academics, schooled quality academics, who are just so damn certain ex ante of what they think?
Yes. I mean, there's been an element of backward-looking, I would say, groupthink and taking everything for granted. And I would say they need to be much more flexible and much more sort of strategically thinking. And I think it's fair to say that a lot of the criticism leveled at the current Fed and that sort of previous Fed chairs has been that there's too much sort of backward-looking playing by with the rule books that they thought would never be ripped up, and yet those rule books have to be challenged.
Thank you so much for getting us started in January. Dominic Konstam's with Mizuho, folks. I can't say enough. I'm flooded with people. Tom, send me his note. Send me his note. Get it from Mizuho. We protect the copyright of all of our guests, even Jordan Rochester, which is tough to do. Can you get out on LinkedIn? Okay, everybody else is on LinkedIn. Dominic, can you write on LinkedIn?
I could try. Yeah.
You could try. Okay, thank you, Dominic Konstam with Mizuho this morning. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We said good morning, patiently waiting Decton, Van Cleef and Cartier in London. Sree Kochugovindan joins us. She is brilliant at Aberdeen Investments as well. Sree, what is the change in your investment strategy over the last 60 days, given the cacophony, the buttressing that we've seen out there of geopolitics and banking as well? Have you changed a view?
We've actually taken a very long-term view, and at the end of last year, we were very aware of a lot of the geopolitical risks that were ahead. So that would be very much in favor of a diversified portfolio. So as we've seen, some of the safe havens, even though they were quite stretched like gold and silver, they're still doing quite well in this backdrop. So we still recommend hedging with those safe havens. But also, if we think about the broader, we were just talking about TSMC earlier. If we think about the broader AI story, one of the recommendations we're making is that looking beyond the big tech names and looking towards broadening out that AI theme towards other regions and perhaps towards real assets, for example, the AI-related infrastructure. So I'd say that a lot has happened, right, but we go with a scenario analysis, and so far we've been okay.
Goldman Sachs out with earnings. We're going to talk to bank analyst Sree Kochugovindan. I'm kidding, Sree. But Sree, as we see Goldman Sachs come out here with some ginormous numbers, equity trading, I'm not going to bore you with the details, Sree, because I know you can't talk about individual stocks. But do you see continent of Europe banking finally has turned a quarter and will begin to show American-like results?
Well, I don't have an earnings forecast as such.
Yes, of course.
The outlook for Europe is still quite strong for this year. I'd say that a lot of if you think about the banking backdrop, moving on from banking in broader as well, we can see that the economic outlook is quite resilient for the rest of the year. I would say that, rates have stabilized. We have seen the end of the easing cycle from the ECB. So there's some stability there from the rate section, from the rate side in terms of margins for banks. We are expecting the ECB to be on hold because inflation is at target. Growth is quite stable, resilient. But at the end of this year, towards the end of this year, I think what we'll start to see is a shift in the ECB, slightly more hawkish tone perhaps, because we're going to see the impact of fiscal spending filter through into the broader economy, particularly defense in Germany, right, defense across different countries. But I'd say that is going to have material impact on the rates outlook as well. So nothing too dramatic, but potentially a hike at 25 basis points at the beginning of 2027.
Alexis, one more, please.
Yeah, since we're speaking international, just want to get Japan in here and what we're seeing with the yen now at about 158.51, 18-month low. There's been a lot of concern over Japan's fiscal policy, what this is going to mean for the Japanese yen. When does that become a problem for global markets?
I would say that for the yen, the global markets are really focused on the carry trade and the carry unwind. We've seen bouts of this in, I think it was last year or the year before, where we had a big unwind in a shift in the yen. It's those sharp movements that we need to be concerned about. And at the moment, what we're seeing is that the yen is oscillating around that 160 level, just almost triggering that level. This is the lowest we've seen since 2024. And back then, we saw a series of interventions from the Ministry of Finance because it was felt that the depreciation in the yen was too excessive. We're hearing that talk again from the Ministry of Finance, right, that the yen has moved away from fundamentals, also from the Bank of Japan. So I would say that it's possible that the yen breaches 160. Some hedge funds are betting on 165. But I would say the Ministry of Finance has already started talking. We have an election coming up. They need to intervene quite soon. And I think the election dynamics are going to be really interesting in the next few days.
Right. Sree, thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Heidi Crebo-Rediker joins us now, Senior Fellow, Geoeconomics at the Council on Foreign Relations. Heidi, you are acclaimed for going beneath the headlines and looking at the silly stuff out there. Let's talk tankers in Russia. What's the dynamic right now of tankers from and to the land of Putin?
So tankers, shadow fleet being the silly stuff is a good way to start. But I think it is important when you have a flood the zone news January to kind of look at some other things that are happening. And I think one important move is that the U.S. is finally moving from sanctioning Russian and Venezuelan and Iranian shadow fleets to actually disrupting them. And so, we've really had shadow fleets test the limits of sanctions. Sanctions are one of our most important economic tool for, it's been a way to keep us from going to kinetic war. But this, we've now seen the U.S. go after some of these Venezuelan ships. It's been high seas, drama on the seas, and so I think it's important to say this is actually effective, and the UK and the Baltic states are looking to follow.
I look, Heidi, at this, and to cut to the simplicity of March or April, with the cacophony of news, is Russia impinged? Does Venezuela have any chance? Can I even state, could Cuba collapse? Are those outlandish statements?
So I don't think they are. I think that we're looking at Cuba being very much under stress. But in particular, going back to Russia, it's one thing. It's easier to go after the Venezuelan ships, but you have the UK has watched as the Russians have been shipping illicit tanker shipments through the English Channel, and so that export route is incredibly important. And if you get the UK and the Baltic states together, actually watching the US precedent, they could actually do a massive shift from just the passive enforcement of sanctions to actual maritime pressure. And so that is a great way to constrain Russia. The other part of it is Ukraine has been actively taking out Russia's Black Sea shadow fleet. And so they're using drone strikes, and they are taking out tankers in the Black Sea. It's a big shift to direct pressure on the logistics that move Russian oil, and the Russians are not happy about it.
Talk to me a little bit more about what Ukraine's doing, because I feel like it's happening in the background and sort of getting forgotten, right? Because there's so much other noise going on. So how is Ukraine doing this? And I guess what's the impact? What has the impact been, or have we seen it yet in the markets, in the price of oil?
So I don't think that that these hits to Russia's shadow fleet in the Black Sea are impacting oil yet. You have a lot of other dynamics, things happen. What's happening in Iran, obviously, Venezuela to a lesser extent, but I do think it's worth paying attention to. Not as much for the pressure on commodity prices, but the pressure on Russia to fund its war against Ukraine. And so this meaningful convergence between the Ukrainian kinetic pressure, literally taking out they took out the Black Sea fleet in the military side, and now they're taking out the Black Sea shadow oil fleet. So combining that with the UK and the Baltics, right. Possibly doing the closing off the maritime escape routes, this is actually about constraining Russia's ability to fund its war.
Heidi, thank you so much. Heidi Crebo-Rediker with the Council on Foreign Relations. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We have to do this with Lisa. Lisa, when was the last time you had a bagel? Like, I'm thinking 2005.
I make cottage cheese bagels. They're delicious.
Oh, come on, Lisa.
They are so good.
National Bagel Day. Thanks, Steve Ducey over at Fox, for reminding me of this. Einstein Brothers here out. I love this. They have terms and conditions when you go into Einstein Bagels today. May not be combined with any discounts, offers, or promotions. 1 coupon per customer.
All right.
Those are the terms.
Duly noted.
Einstein Bagels as well. The newspapers need to get to it. Lisa Mateo.
All right, let's talk weight loss drugs since we're talking bagels and all that. So we've heard about the drugs affecting restaurants, right? People eating less. Well, who is benefiting? So apparently, with more people using GLP-1s, it could end up saving airlines some big money. This is from a Jefferies analyst, okay? They say the biggest airline, they could save up to $580 million in fuel costs this year because people are lighter. Did you ever think
when
of
you're
it that
skinnier,
way?
it takes less fuel to get you from point A to point B. Okay.
I mean, think about it. Like they're doing everything right now to make planes lighter. Like they're taking an olive off of a salad. They're removing magazines. They're trying to make the planes lighter.
Is that why the olive was missing from my salad?
Or from your martini?
No, they don't do martinis on the planes anymore.
No, they don't. Those days are gone. Just like dressing up to get on a plane. We talked about it yesterday.
Yes.
Those days are gone.
I was on Air France and they had wine. I couldn't pronounce any of them. I just said, give me Mogan David. Next.
Okay. A lot of people, they have those self-help people like gurus like Tony Robbins and all these other folks. So people are turning to AI to solve all different problems, but they're using chatbots as personal assistants and therapists. So now these self-help gurus, they're starting to use AI. They're making their own AI chatbots and they're charging subscription prices.
Oh, of course they are. We knew that was coming.
Exactly. So now people pay a monthly fee to talk to an AI chatbot that is, based off the AI, the self-help
What's
guru.
a chatbot? I don't understand chatbot.
Chatbots, when you go in and you can ask them questions and
like a chat.
Yes, correct.
It's like AI,
but it's a specific one for yes.
Yeah.
So
Have you ever been with a business relationship where you've used chat and it's worked? I'm 0 for 2000.
no, I think when I asked for suggestions, I asked for a suggestion for a gift idea once, and it actually was
nice.
super helpful. But these are chatbots for specific people and specific businesses and
Should I
specific,
have a chatbot?
targeted to them. Should you have a chatbot?
Oh, that would be
you
awesome.
could charge a
The Tom
subscription.
Keene chatbot. We're
See?
doing it. We're going to make it happen.
Some of these are charging $99 a month. You could get something off of this. Tom.
Another
I think you're
revenue
onto
stream
it.
for Tom Keene.
My God.
You're onto something.
Put the kids through college. Next, one more.
Okay, one more. This one's right up your alley. Popular Fenway Dive Bar is closing after nearly a century. The Dugout Cafe. Have you been a frequent visitor, Tom Keene?
I darken the door. You go down a little alley. It's on Kenmore Square there. It's legendary with Copperfields down the street. Cask and Flagon. Saya's been there in the control room. And it's just truly, it's a legend that sort of past its due date. It's not what it was in my youth.
But I'll tell you what, the kids, my son goes to college up there, and he and his friends have frequented.
See?
I'm shocked.
Yes.
Yeah, shocking.
But they're basically transferring their liquor license. It's going to a place called Earl's Kitchen and Bar. It's going to open in Seaport next year. So that's a big sign. Yeah, it's a shame.
We're losing.
It's a shame.
We're
A lot
losing
of
all
people,
the good ones.
Baseball fans, sports writers, even players, famous players have
Lisa,
gone.
Ted Williams used to drink.
Yes, that's one of the names. Jimmy Fox, Ted Williams. Yeah.
Do you know who Ted Williams
I have no
is?
clue.
92.9 FM Boston.
My
On
apologies.
behalf of Michael Bloomberg,
His hand is in his palm if you cannot see
Ted
this.
Fine, and everybody else of Red Sox Nation. She'll be going into indoctrination here as we come up.
I'm honest.
You don't?
Let me go back to my breakfast.
Okay. Yeah, go back to your bagel. It's newspapers with Lisa Mateo. Thank you for that.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.